but it is a possible analysis, and it doesn't break any hard and fast rules. And if we have a look at the 18-month FLD, I think you'll see that the price cross surrounding August is a little more convincing than the price cross surrounding July. Here's price crossing the 18-month FLD in July. I hope you can see that. Not a very convincing cross. It does cross below it, but it crosses much more convincingly down here in August, which means that considering the analysis purely from an FLD perspective, this is a much cleaner, more usual picture of price interacting with this FLD surrounding the 18-month trough, which is there, than this over here. This is a bit messy. Okay, so this is a perfectly viable analysis. It's not quite as neat. It's not quite as tidy. And looking at it, you probably say I'm not as happy with it. But let's have a look at what it says about what's happened recently. So we zoom in. What it says about what's happened recently is that the straddle trough in March of 2010 was not a trough of the 40-week cycle, but it was a trough of the 20-week cycle. Okay, then here the trough in June of this year was a trough of the 80-day cycle, same as our previous analysis, and this trough in August was a trough of the 40-day cycle, same as the previous analysis. But then, of course, this trough here that has occurred is a trough of the 40-week cycle, a very late, delayed trough of the 40-week cycle. Now, again, that bounce, that big move that we've seen coming out of that trough, is a perfectly is a perfectly possible 40-week trough. Okay, I'm going to stop talking quite soon, and I'm going to ask for your comments about these three different analyses. But the final thing that I would like to say is often when you say to people, well, I think there are three different options, three different things going on, people tend to lose confidence, and they say, oh gosh, well, I don't know, it's all pretty meaningless if there are three different options. But I would like to sort of summarize everything I'm saying by having a look at what's the difference between these three different analyses. Okay, what is the difference? Here's okay. Let me go to what I still consider my preferred analysis, and let me show you the same sort of time scale on each of them, going back to the 18-month trough. Okay. So my preferred analysis is still this one over here, which indicates that we are coming down, and I'll try and draw this, that we are expecting price to come down in its final 80-week cycle into a trough, which will be of at least 18 months and probably 54-month magnitude. So a really big trough. So we're expecting price to come down. And let's say you were trading the 40-day cycle, then the current 40-day cycle is about to end. Price is moving down already into the trough, which we're expecting sometime in the next week. And you've got one more 40-day cycle left to trade before this big low is formed, and that cycle will have a strongly negative underlying trend. Okay, that summarizes, if you like, that analysis. Let's have a look at the second analysis. There we go, the 20-week cycle. This cycle is saying that time-wise, we're expecting the 54-month and 18-month cycle to happen at exactly the same time towards the end of this year. But within that time, we need to fit in a few more smaller cycles. Okay? So the current 40-day cycle is about to come to an end. And according to this analysis, we would have time for another 3 cycles before the big cycle is going to be encountered. Okay, and the underlying trend of those cycles is gradually getting more and more negative as you go down. So in my mind, there's not a very big difference between those analyses. as the cycles unfold and we see the shapes that these cycles are taking, if the next 40-day cycle develops a very bearish shape, then we're going to say, okay, that was probably the first analysis. If the next cycle has a slightly bearish shape, then I think this is going to become our preferred analysis, and we're going to say we're still expecting even more bearish cycles to play out before the trough that we're expecting early next year. Okay, let's have a look at the third option, which is, I think, the least likely option, because it has such a very stretched. Let me show you how long this 40-week cycle is. It's 58 weeks. That's a very long 40-week cycle, and it's probably so long most people out there would say, I'm not even going to consider it. But I still throw it into the mix because I think it's interesting to keep an eye on the really unlikely analyses. As soon as we can eliminate them, we will. What does this analysis say? Well, this analysis says that the current 40-week cycle is coming to an end, and all that's going to happen is that we're going to have even more cycles to play out, and they're going to be moving downwards towards the same expected 54-month or 18-month trough, but that trough is likely to happen later. If in the meantime we get an indication from the market that the shapes of the 40-day cycles are not bearish shapes, in other words, early peaks and that kind of shape to the cycle, then we're going to say, okay, these cycles aren't bearish anymore, and therefore we need to consider the fact that that the cycles aren't playing out as we have expected. Finally, some of you might ask, why have I not considered the fact that the trough on the 4th of October is a trough of the 18-month cycle? Well, it could be, and I tried playing around with a few analyses that showed that as being a trough of the 18-month cycle, but I didn't find one that was anywhere near as convincing as these three analyses, so I rejected it. So I'm going out there on record as saying I don't believe it was a trough of the 18-month cycle. I might be proved wrong, who knows, but I think that it was a trough of most probably either the 80-day cycle, as this analysis shows, or possibly a late 20-week cycle, and that we're going to see a few more cycles playing out before the trough that we're going to encounter. And so I am still certainly bearish the S&P 500. I still think we're going to see a lower trough in early 2012. I think it might occur later than expected. But I do think we're going to see the fulfillment of that FLD projection down to 1050 or below. I think we're going below 1050. I really do, and that's happening in early 2012. So you've all been sitting there very, very quietly. I don't know if anybody has anything to say. If you have your own analysis you'd like to share, I can change the control of the computer onto your screens, and we can have a look at what you think might be happening in the markets at the moment. Perhaps there's somebody out there who thinks that the 4th of October was a low of the 18-month cycle. I'd be interested in hearing any and all of your ideas. So let me know what you think. William says, I do. You do think it was a trough of the 18-month cycle? That's interesting. Okay, all right. Well, do you believe that the 18-month was the 18-month cycle was the longest cycle in that nest of lows, or do you think that it was a trough of a much longer cycle, the 4.5-year or 9-year cycle? $18-month is the longest. Okay. Well, that's an interesting idea. Perhaps, I'd strongly encourage you, because I love hearing other people's opinions about the market. I'd really strongly encourage you to post to our forum. Take some screenshots of your analyses and contribute to the discussion on the forum. if you have an analysis in Sentient Trader on your computer screen now, I can switch control and we can all take a look at it. You can send copies of charts. How do you mean, to the forum? Gosh, there's lots going on in the chat window. William, you can send copies of charts to the forum. The forum is available for everybody to post to. We invite your comments. You can't send, you cannot upload charts, unfortunately, to our NetViewer session. But if you have Sentient Trader open on your computer, we can all take a look at your computer and see what it's saying. Bruce has been technical analysis over 25 years, not explored cycles to this extent. Okay, well, welcome to it, Bruce. And reading suggestions. Her cyclic theory is going to prove to be a very rewarding field of research. I suggest reading suggestions. Of course, what we do here is strictly her cyclic theory, with an understanding of various other cyclic theories. So the reading suggestions I would recommend. We have a good many online resources on our website. Take a look at those webinars, videos, written documents. But the best way of doing it, I think, my latest favorite forum for it are our online workshops. We're running online workshops, and they're 5-hour intense sessions. I start off from the basics, go all the way up to well, some of the workshops are very advanced. And so I'd really recommend you get involved in the online workshops. They're a huge amount of fun and quite a lot of work, and you'll learn a lot.